Get stock specific though, shall we? Watching in small and micro cap spaces, he's got his eye on the prize. Jason McIntosh is joining us now from Motion Trader in studio. Jason, welcome back.
Nadine, always fun to be here.
Yeah, so you've got your algorithms looking across this market. You've got the data. You've brought it to us.
All of that.
So talk to us about what's on your radar right now.
Look, it's interesting. Like, there's been a lot of talk about all the winners during COVID. Like, we've had the afterpays and techs in general. E-commerce has been a winner, but I think it's also now interesting to look at some of the ones which have been left behind and that have potential to could do some good things over maybe the next 6 to 18 months. So one such stock is a company called Vista Group. Now this is it's a New Zealand-based company, market cap of about $450 million, ASX listed. So what they do is they provide software and technology to the global cinema industry, and across distribution and exhibition. So I think for most people, you never would have heard of Vista Group, but most people probably would have been across their software through going to the cinema, because they're actually a market leader. They've got something like a 38% market share for their cinema management software. And you exclude China, it's a 51% market share. So it's they're active across 110 countries, and so it's really involved in that sphere. And like, COVID's been a disaster for cinema, as we all know. And so look, the cinemas weren't shut; they were down at reduced capacity, and then the blockbusters. Where have the blockbusters been? Like, my kids and I have been waiting for the latest Top Gun for the last year. Just nothing's coming out.
So you're keen to go back to the cinema, but I wonder if perhaps viewing habits have changed, that people are more reluctant to go to the cinema now, despite obviously us moving perhaps beyond COVID. Do you think we're going to reach those same levels? Because I mean the death of the cinema has been on the cards for years, but of course they managed a bit of a comeback there more recently.
Yeah, look, well, it's interesting. This has been a growth story for quite a while. So from 2015 to 2019, Vista was growing their revenues every year. So like the Netflix and the like would all been said to disrupt the cinema industry, but look, it's always been resilient. It comes back. People like to go out and do stuff rather than being home all the time. So look, no one knows how we're going to come back, but even if we just come back to some sense of normality, or how normality used to be, it's there's probably upside in this stock. So this stock is really leveraged to a global going back to the way things kind of were.
It came up actually in conversation earlier this week, believe it or not, Jason, and talking about New Zealand tech, big tick there, and also being the ultimate reopening trade that hasn't been exploited yet. So your analysis has brought Vista Group to the fore. What else has been brought to the fore by your motion detectors? Yeah, look,
another stock which I've been looking at is a company called LaserBond. Now this is a really interesting small cap. It's only got a market cap of about $70 million, so it's not in the all ordinaries. But what they are, they're a world-class leader in surface engineering technology. So what that all means is they're involved in industries which have capital-intensive equipment. So largely it's the mining industry. So they've got clients like BHP and Rio. And what makes their technology valuable is that it increases the wear life on the components within that machinery. So this is one of those real off-the-radar stocks that you don't typically come across. And it's look, from 2015 to 19, they grew revenues from about 10 million up to 23 million. Came back a little bit last year, COVID-related issues. But look, management's saying they think they can get to 26 million in revenues this year, 40 million the year after, and it's all based on acquisitions they think they can make. So there's a growth aspect there, a recovery in the US steel industry, and they've also got a record order book for new business. It's interesting looking at its share price history over the last few years. Like 2018, they were a 10-cent stock. Then this growth story started to come up, shot up to just under $1 by mid-2019. But like so many growth stories, just got carried away, euphoria into the share price, and it's come back a lot. The last 18 months, I think it's actually been quite constructive. A lot of backing and filling in the share price, And now we're starting to see this emerging momentum come in on the back of a good growth story. And yeah, that emerging momentum is what's triggered my interest. And then you look behind the momentum, look for the story, and there is a really interesting story there. So one of those stocks which could, I think, have the potential over the next couple of years, could run 100% plus.
All right, well, that's interesting. So that's LaserBond, one to check out. Your third one, Australian Unity Office Fund. Now, this is interesting because obviously commercial property, given what it's been through, we're at as far as the property sector. It's got 9 office towers in a portfolio at about, 700 million at the moment. Has been the target of numerous takeover attempts recently.
Yeah, look, it's an interesting stock. It's a small to mid-tier office fund. Market cap's around $350 million, and it's a yield and a potential recovery growth play, I think. And so yeah, it's got these office towers: Brisbane, Sydney, Melbourne, Canberra, and Adelaide. And I think the big question with office is, what's the recovery in office space usage going to be like? So it's a big unknown. We don't know. We don't know what the office environment is going to be like in the future. But I think a lot of that uncertainty is already priced in, and this is why the share price is where it is. So you look at the fundamentals of this company. It's got a dividend yield a little over 6%. It's trading at a 15% discount to NTA, and it's not unique to AOF. Some of the other office players also have similar sort of numbers like that, and so this could be like an interesting space generally in the office sector. But what caught my eye with this one is that out of the office trusts I've looked at, it's got it's probably got the most interesting emerging momentum portfolio profile, and that's what's drawn my attention to it. And look, the RBA saying no rate hikes till 2024. So when you look at it from that perspective, a 6% yield is it's hard to ignore.
Yeah.
And even if we just see an unwinding of that discount to NTA, well then you've got a growth aspect potentially there as well. So office space it does come with risk, but I think with the current pricing, that risk is largely minimised, and there's a good total return story there over the next couple of years. And if the pendulum continues to swing back towards a more normal open economy, I think this office property trust space, AOF in particular, could be well worth having a look at.
Good
All right,
value.
Jason. So there are 3 to look at: Vista Group, LaserBond, and Australian Unity Office Fund. AOF is the ticker code. Jason, great you can join us from Motion Trader.
Thanks for having me in.
Thanks,
Good
Jason.
to see you both.
Yeah, you too.